Welcome back, Plutus people. I'm very excited today because we'll be talking about the stock market, which is my strength and which is where I made most of my money. If you haven't checked our videos on our crypto series, please go ahead and check them. We'll be revisiting those and maybe coming back to cryptocurrency again as part of your investing portfolio later. When we're talking about the stock market, my goal to begin with was to talk about 5 principles of investing that have served me well and helped me avoid 5 big mistakes that people make all the time. I'm not proposing that I have not made those mistakes. Those are very expensive mistakes that I made myself, and I hope that you guys can avoid those by learning from this video. We'll start with the number 1 most important principle that has made me a lot of money and, more importantly, helped me not lose a lot of realized gain. Plutus' first principle of investing is nobody ever went broke taking profit. You always take some profit and take some money off the table in a winning position. Now, don't get me wrong. Let's say you have value laying around, you don't leave value on the table. But what I'm saying is that when you're over leveraged, you will make poor investing decisions. Don't be over leveraged. If you have doubled your investment and that was your goal, take some money off the table. I'm going to talk about GameStop here because GameStop has been a big win for me recently. People talk about diamond hands and paper hands and all of that. But what you have to understand is that you have to make sure you take some profit off the table because nobody, again, ever went broke by taking profits. You can still believe in the stock and in your position, but you have locked in some gains by doing that. After we have taken some profits, following Plutus's number 1 principle of investing and avoiding the mistake of losing your unrealized profit, now we have all this money sitting outside of the market. And your friends are talking to you about the new and most exciting company that has come out and it has doubled in its value over the past 24 hours. They want you to put your newly gained profits into it and now triple your money. But always remember Plutus's second rule of investing: FOMO is one hell of a drug. Fear of missing out. Please make sure you don't fall victim to the FOMO loss. I'm going to use my example here again so you can learn from my mistakes. At the height of the pandemic, Zoom, ticker symbol ZM, came up with one of their best earnings. After hours, the Zoom stock doubles in value. It just keeps on going. I've never seen anything like that in after hours action. I'm so excited to be part of it. I'm suffering from FOMO. The next day, as soon as the market opens, I buy a bunch of calls. I'm introducing this term here, but we'll be simplifying it and talking about our option strategy in our next video. So a little bit of a teaser there. So please stay tuned to watch that. But I buy a bunch of these calls, and just to make it very easy and to save me some embarrassment, we'll say they were worth $20,000. In literally a matter of couple of minutes, the same call options were down 50% without the stock moving too much because I missed a fundamental option strategy, which is implied volatility. Not keeping that in mind, suffering from FOMO even though I knew it. So again, avoid FOMO, make smart investment decisions. So you have avoided FOMO, you have taken some profits off the table, you're thinking you're a seasoned investor. But the problem is you bought a stock now and it's down 10%. As soon as you bought it, you're like, oh my God, I'm cursed. As soon as I bought this stock, it was 5% up for the day and now it's down 10% within seconds. Don't panic. Plutus investing principle number 3 and a big pitfall to avoid. Always have a plan. Have an entry and exit point devoid of emotion. I'm not saying that always cut out your losses very quick. It's actually completely the opposite. I'm going to talk about what I did and let's learn from it. Cannabis industry at the height of its legalization in Canada every stock is doubling in its value or tripling in its value. People have made crazy fortunes. I want to be part of it. I break my second rule. I FOMO. I go into a stock symbol that I have no idea about the company. My friend has sent it to me. I looked it up briefly. I have no idea what the intrinsic value of the company is. To this day, I have 1,000 stocks of a cannabis company that has since gone bankrupt. Since then, that cannabis company has gone bankrupt. If I had adhered to my Plutus principle number 3 of investing, of having a set entry and set exit point, I would have avoided that mistake and still have some money that I could invest in a better trade and maybe recover my losses. So when you decide tomorrow that your friend has sent you a ticker that would double the next day, please always remember where you would cut your losses or set a stop loss. Again, a new concept, but we'll be talking about this in our next video, where I'm going to walk you through about how to place an order for a stock, how to set a stop order or a sell order, and we'll go over all of that in our next video. Let's move on to our 4th principle. Always try to invest in companies that you understand and believe in. Warren Buffett, one of my favorite investors of all time, says whenever he's deciding to buy stock, he thinks of buying a piece of that company. I see a lot of people buying stocks and buying companies that they have no idea about as to what their business model is, what they do, or even in some cases what it actually means. I had a friend who bought APPS, Digital Turbine. Great stock, by the way, and I'll be talking about it in one of our videos as ticker of the week at some point. But my friend had no idea what this company did. Don't be my friend. Avoid that mistake. Coming back to principle 4 of Plutus's investing principles, I talked about Warren Buffett. Let's talk about my other hero, Elon Musk, or as I like to call him, Daddy Elon. Elon Musk is one of the great geniuses of our time. I wanted to talk about him in principle number 4 because Tesla is one of the stocks that I made most of my startup money in, and it has been a very profitable trade for me. When it comes to Tesla as a stock, I believe in that company. That's why I'm in it. So that's how it applies to principle number 4 of investing in companies that you know of, that you believe in, companies that are game changers, companies that have good fundamentals. Now, this will be a controversial topic because a lot of stock traders would say that Tesla's fundamentals, or PE ratio as they like to call it, is astronomical. But I'm using fundamental on purpose because I think of fundamentals as a complete picture, not only just the profit expense ratio or how much profit revenue we're generating, but it also factors in how a company sometimes can be a disruptor and a game changer, where traditional investors might not know the true value or how to value a company. And I believe that to be true for Tesla. When a person such as Daddy Elon can land rocket ships back on a drone ship in the middle of nowhere, I'm not going to bet against a guy like that. I believe in that company. I'm never going to sell a single Tesla stock that I own. And I want you to do the same with Plutus investing principle number 4 by investing in companies that you know of and that you believe in, with a close eye on their fundamentals as well. You have followed the 4 principles that Plutus has laid out and avoided those pitfalls. You feel pretty confident to be a profitable trader as is. But don't forget the 5th principle, which in my mind is very, very important in terms of portfolio planning. We'll do a video on how to have a profitable portfolio as well. But let's talk about the 5th principle. Diversification is key. I'm going to give you a shameless plug here about our cryptocurrency video that we did, and we talked about altcoins or other coins apart from Bitcoin. So that's where diversification is very, very important as well. Not putting all your money in Bitcoin and hoping for the best. But hey, we're done with crypto, so we're talking about the stock market. So I'm going to talk about the importance of diversification in my portfolio. When I first started out, my portfolio was tech heavy because I knew those companies and I believed in those companies as I laid out in principle number 4. However, you can't put all your eggs in one basket and hope for the best. I still remember to this day, I believed in Netflix very strongly. Pandemic was coming, Netflix, people were watching Netflix, new subscribers were coming. But if you looked at their last Q3 results, I had some call options going into earnings. And we're gonna talk about this in another video too. I know I'm laying out all these other principles that we're gonna talk about, but there's so much to cover with the stock market. So coming back to Netflix, I was hoping that Netflix will boom after its great earnings because everybody was staying home watching Netflix. However, the market had already priced that in. The market is forward looking, and this is for another time, but don't hold your call options or put options into earnings because the implied volatility crush will get you. So same thing happened to me, lost some money, but learned an important lesson. Always diversify, always make sure that you hedge against your losses and your positions. Let's review these 5 principles so that we have them in one place and they're gonna help you save money like they did for me. So principle number 1, nobody ever went broke taking profits. Principle number 2, don't be a victim to FOMO like me. Principle number 3, have an entry and exit plan that you abide by and take emotion out of the game. Number 4, always invest in companies that you believe in. And principle number 5, diversification is key. It's time for ticker of the week. So today's ticker of the week, I'm very excited to share with you because it's one of those hidden gems. Today we're going to be talking about Palantir Technologies, ticker symbol PLTR. And I hope my graphics guy puts it up here because you'll see the chart and where it's trading right now. 52-week high in the range of 45 bucks, currently trading around 25-26 bucks a share. Palantir Technologies is a game changer in data collection and data arrangement and data mining. Their biggest customer at this point is the US government and the intelligence agencies that use their Gotham software as their main software platform. Now, Palantir Technologies is branching out into the civilian world with their Foundry software. And as soon as they have major contracts, they've already had major contracts, but as soon as they have more major contracts with the civilian industry, it's gonna be a game changer. And I think it's gonna hit its 52-week high in no time again. So get in on Palantir Technologies before it goes up. Kathy Woods is highly invested in Palantir Technologies as well. And this is just my 2 cents. I feel with the Biden administration coming in and the focus being more on data collection, drone attacks, and all that kind of jazz, Palantir Technologies is going to be at the forefront of all of that intelligence and military activity. As always, please share your feedback with us so that we can continue to create quality content for you guys.